Welcome to our deep dive into the world of South African exchange-traded funds.
Ah, ETFs.
Yeah, we've got a stack of fresh fact sheets right here
Yeah.
from Satrix,
Oh, very
a
nice.
major South African investment firm.
Yeah.
And they're packed with insights into the market's performance at the close of 2024.
Like a snapshot in time.
It's like a financial time capsule, capturing those key events and trends that are shaping those investment decisions in South Africa.
You know what I find intriguing about these fact sheets?
What's that?
They aren't just dry numbers. You know?
Right.
They reveal kind of this complex interplay between global forces, local dynamics, and individual investment choices.
Yeah, it's like a puzzle we're putting together.
It is.
But before we delve into the specifics, let's make sure we're all on the same page.
Okay.
Many of you are familiar with exchange-traded funds,
ETF.
or ETFs, but for those who might be new to the concept,
Right.
can you give us a quick rundown of what an ETF is and how it works?
Absolutely. So imagine an ETF as like a pre-assembled investment kit.
Okay.
Instead of purchasing individual stocks or bonds,
Right.
you're buying shares of an ETF
Yep.
that represent a basket of securities.
All right.
So this instantly diversifies your investments.
Okay.
It spreads your risk across multiple assets.
That makes a lot of sense. And I noticed these fact sheets highlight benefits like tax efficiency and low fees.
Yes.
What's the story there?
Yes, the South African Section 12T benefits.
Okay.
Yeah, this is a significant advantage for local investors. Essentially, you can invest up to a certain limit annually in qualifying ETFs and pay zero tax on dividends, income, or capital gains.
Wow.
This makes ETFs particularly attractive compared to some other investment vehicles.
Yeah, that's a pretty sweet deal.
It is.
Especially for someone like me.
Yeah.
Who appreciates keeping more of their hard-earned returns.
Exactly.
But tell me, when they talk about low fees, how do ETFs compare to other options, like actively managed funds?
That's a great question. So generally, ETFs have lower fees compared to actively managed funds.
Okay.
Where you're paying a fund manager to try and outperform the market.
Right.
With ETFs, you're essentially hitching your wagon to a specific index or sector, resulting in a more passive management approach and lower costs.
So with ETFs, you're essentially getting that professional diversification at a lower cost.
Yeah.
But enough about the theory. Let's get to the action.
Let's do it.
2024 seemed like a wild ride for the markets.
It was.
Both globally and here in South Africa.
For sure.
What were some of the major events that shaped investor sentiment?
Well, globally, we saw kind of a mixed bag of economic performance. The U.S. market really stood out with robust growth. The S&P 500 gaining 12%.
Wow.
And the tech-heavy NASDAQ 100 surging even higher with a 14.8% gain.
Wow.
This strength was fueled by a combination of factors.
Such as?
Including Donald Trump's re-election in November, which boosted investor confidence in his pro-business policies.
I see.
And the potential for further corporate tax cuts.
Those are some impressive numbers.
They are.
But while the U.S. was popping champagne, were other parts of the world feeling the hangover?
Precisely, China and India. Two major players in the emerging markets. They encountered their own hurdles. The MSCI China Index managed a rather meager 1.1% gain for the quarter.
Wow, so just barely above water.
And then the MSCI India Index actually declined by 2.9%.
Oh, so underwater.
Yeah, and then Europe presented a mixed picture, with the UK surprisingly outperforming the broader European index.
It's fascinating how these global politics and economics, they can ripple across continents, impacting investor sentiment and portfolio performance. But let's bring it home to South Africa. How did our local market weather this global storm?
The South African market, as reflected by the ALSI and top 40 indices, unfortunately underperformed in the fourth quarter. With drops of 2.1% and 3.4% respectively. And surprisingly, two sectors that are typically considered stalwarts of the South African economy. Resources and financials were the primary culprits behind this drag.
Wait, resources and financials dragging down performance.
I know, right?
That's unusual.
It is.
They're usually seen as quite reliable sectors in South Africa.
Yeah, for sure.
What factors contributed to this underperformance?
You're absolutely right. However, in the fourth quarter of 2024, they encountered significant headwinds. Resource companies in particular felt the pinch of those global economic slowdowns, which placed downward pressure on commodity prices.
I see.
Companies like Sasol African Rainbow Minerals, Kumba Iron Ore, and Sibanye-Stillwater all ended the quarter in the red.
Oh, wow.
Sasol, in fact, experienced a particularly dramatic fall, with its share price plummeting by a staggering 55% for the year.
A 55% drop. Yeah. That's certainly cause for concern.
Yeah.
What factors led to such a drastic decline for Sasol?
You know, a confluence of factors. Operational challenges seemed to hit them towards the end of the year.
Okay.
And this led to investor apprehension about their ability to navigate environmental and operational risks.
I see.
So this uncertainty likely played a significant role in the share price decline.
So the market was sending a clear message.
Yeah.
That Sasol needed to address these concerns head on.
For sure.
Now, shifting gears slightly.
Yeah.
What was the performance like for other asset classes in South Africa?
Okay.
Such as bonds and property.
Well, bonds, as measured by the ALBI, managed to squeeze out a slight gain of 0.4% in the fourth quarter.
Okay.
The property market, represented by the SAPY index, didn't fare as well, experiencing a dip of 0.8%.
Okay.
And as always, the rand had its own adventures.
Oh, the rand always keeping us on our toes.
Yeah.
Up and down, up and down.
Depreciating against major currencies like the US dollar, the pound, and the euro, with a notable 9.5% loss against the greenback.
Oh, they were.
Always keeps things interesting.
But now let's zoom in on the stars of our deep dive.
Okay.
The ETFs themselves.
Yes.
From these Satrix fact sheets, it's clear that they offer a diverse menu of investment options. It's like a buffet for investors.
It is, and that's one of the great advantages of ETFs. Yeah. They cater to a wide range of investment goals and risk appetites.
Totally. Shall we start by exploring the equity ETFs?
Let's do it.
The Satrix 40 ETF immediately caught my eye.
Yeah.
It tracks the top 40 index, which is often seen as a bellwether for the South African market.
For sure.
Can you tell me more about its composition and what makes it attractive to investors?
Yeah. The Satrix 40 ETF is a popular choice for investors seeking exposure to the heavy hitters on the Johannesburg Stock Exchange.
Yep.
The fact sheet reveals a heavy weighting towards financials, comprising about 34% of the fund. And technology coming in at around 17%.
Okay.
So an investment in this ETF is essentially a bet on the continued strength of these two sectors.
Interesting. And as you might know, it's a market cap weighted index.
Yes, it is.
What exactly are the implications of a market cap weighted index?
Yeah.
And how might that impact an investor's decision to choose this ETF?
So in a market cap weighted index like the Satrix 40 ETF, a company's influence is directly proportional to its market value.
Okay.
The larger the company, the more it sways the index's movements.
I see.
It's a bit like a popularity contest where the giants have the loudest voices.
Right. So an investor needs to consider whether they believe those dominant companies will continue to outperform or if a more balanced approach might be preferable.
Exactly.
That makes sense. Now, I'm also curious about the Satrix Capped All-Share ETF.
Okay.
What's the significance of the capped element?
Right.
And how does it differ from the Satrix 40 ETF?
So the Capped All-Share ETF offers a broader perspective on the South African market.
Okay.
By tracking the entire all-share index, however, it introduces caps or limits on how much influence any single company can wield over the ETF's performance.
Right.
So this prevents one or two colossal companies from disproportionately driving the returns.
Oh, so it's a way to mitigate that risk.
Yes.
Of having your investment performance overly reliant on the fortunes of just a few companies.
Exactly.
I like that. Now I'm seeing several sector-specific ETFs.
Yeah.
Like the Satrix Fini ETF for financials and the Satrix Resi ETF for resources.
Yeah.
What type of investor might be drawn to these more targeted ETFs?
You're right. Satrix offers a range of sector-specific ETFs for investors who want to make a concentrated bet on a particular sector's performance.
Okay.
These ETFs provide that focused exposure.
Right.
Someone who believes the financial sector is poised for strong growth might choose the Satrix Fini ETF, while an investor bullish on commodities might opt for the Satrix Resi ETF.
Okay.
However, it's crucial to remember that sector-specific investments come with higher risk, as they lack the diversification benefits of broader market ETFs.
That's a good point about the trade-offs between targeted exposure and diversification.
Oh, for sure.
So far, we've discussed ETFs that track major indices and specific sectors. What other flavors of equity ETFs does Satrix offer?
Okay.
I'm particularly intrigued by the Satrix Momentum ETF and the Satrix Value Equity ETF.
Okay.
What makes these stand out from the crowd?
Now we're entering the realm of factor-based ETFs.
Ooh.
Which can be quite interesting.
Yeah.
These ETFs focus on specific investment styles or factors that have historically displayed unique performance patterns.
I'm all ears.
Okay.
Could you explain the differences between momentum and value investing?
Yeah.
And how these ETFs capture those styles?
So think of momentum investing as chasing the current winners in the market. It's betting on stocks that have been demonstrating strong recent price gains, with the expectation that this upward trend will persist. The Satrix Momentum ETF would appeal to investors who believe in riding the wave of market trends.
Okay, so riding the wave. Got it.
Yeah. Value investing, on the other hand, is about seeking out those hidden gems, companies that appear undervalued by the market, perhaps due to temporary setbacks, but whose underlying fundamentals remain strong.
I see.
The Satrix Value Equity ETF would attract investors who believe in uncovering these diamonds in the rough.
So momentum is about riding the wave.
Yeah.
While value is about spotting potential comebacks. It's fascinating how ETFs can encapsulate these different investment philosophies.
It is.
Before we delve deeper into those,
Good.
Let's shift gears and talk about bond ETFs.
Okay.
I'm noticing the Satrix Bond Index Fund
and
the Satrix ILBI ETF listed here.
Okay.
What types of bonds do these track?
Yeah.
And what kind of investor would be interested in them?
So the Satrix Bond Index Fund aims to replicate the performance of the South African bond market as a whole.
Okay.
It's a broad way to gain exposure to fixed income securities, which are generally considered less volatile than equities.
That's correct.
Investors seeking a more stable income stream, or those who want to diversify their portfolio with a less risky asset class might be drawn to this ETF.
Okay, so if you want something a little bit safer,
yeah,
maybe the Satrix Bond Index Fund.
The Satrix ILBI ETF, on the other hand, is a bit more specialized. It tracks an index of inflation-linked bonds.
Inflation-linked bonds. Those sound interesting.
Yeah.
Tell me more about how they work.
Okay.
And who might benefit from them.
Inflation-linked bonds are designed to shield your investments from the erosive effects of inflation.
Okay.
Their principal value is adjusted periodically based on the inflation rate, meaning your investment keeps pace with rising prices. So this can be particularly appealing to investors concerned about preserving their purchasing power, especially in an environment where inflation is a concern.
So that's a clever way to hedge against inflation.
It is.
Now let's venture beyond South Africa's borders.
Let's do it.
I'm seeing a few ETFs with feeder in their names. Such as the Satrix NASDAQ 100 feeder ETF and the Satrix Global Infrastructure feeder ETF.
Okay.
What exactly are feeder ETFs and what makes them distinct?
So feeder ETFs provide a pathway for South African investors to access international markets without the complexities of directly investing in foreign exchanges. They essentially feed into a corresponding ETF listed on a foreign exchange, granting you indirect exposure to those global assets.
So they simplify the process of diversifying internationally.
They do.
Can you elaborate on those two feeder ETFs?
Yeah.
The Satrix NASDAQ 100 feeder ETF and the Satrix Global Infrastructure feeder ETF. What specific investment opportunities do they offer?
So the Satrix NASDAQ 100 feeder ETF offers a pure play on U.S. tech giants. It mirrors the performance of the NASDAQ 100 index, which, as we discussed, had some remarkable gains in 2024.
It did.
This ETF would be attractive to investors who believe the U.S. tech sector's growth trajectory will continue.
Okay, so if you're bullish on U.S. tech, NASDAQ 100 feeder ETF.
The Satrix Global Infrastructure feeder ETF invests in companies involved in developing, owning, and operating various infrastructure projects around the world, like toll roads, airports, utilities, and telecommunications networks.
Oh, wow.
This ETF could appeal to investors seeking long-term growth potential tied to essential infrastructure development.
It's amazing how ETFs have opened doors for investors to participate in a vast range of markets and sectors.
For sure.
But before we get lost in this global tour, let's pause and reflect on a critical aspect of ETF investing. Performance. We've seen that 2024 was a mixed bag.
It was.
For various sectors and markets.
For sure.
How did this translate into the actual performance of these Satrix ETFs?
That's a great question.
Yeah.
And it's what we'll be exploring in the next part of our deep dive.
Oh, perfect.
We'll delve into the specific performance numbers
Okay.
and discover how investment style and sector exposure played a significant role in shaping those returns. Get ready for some interesting revelations.
I'm all for interesting revelations.
Yeah.
Let's dive into those performance numbers.
Let's do it.
And see what stories they tell.
Yeah. All right, let's unpack those performance numbers. Remember how we talked about the diversity of returns across different ETFs? A prime example is the Satrix Capped Indie ETF focused on industrial companies, which had a stellar year.
It did.
Boasting a one-year annualized return of 16.46%.
That's a hefty gain.
It is.
What were the driving forces behind such strong performance for the Capped Indie ETF?
It seems the resilient consumer spending in South Africa played a significant role. Looking at the ETF's top holdings, Clicks Group and Pepcor, both major retailers, points to the strength of consumer discretionary spending as a key driver.
That makes sense. People were still out there shopping.
Yeah.
Boosting those retail stocks.
Yeah.
I'm also seeing that the Satrix FINI ETF, tracking the financial sector, had a decent year as well.
Yes.
With a one-year return of 20.78%.
Indeed. It seems the financial sector rebounded well in 2024.
Okay.
After facing some earlier challenges, this suggests that investor confidence in South African banks and financial institutions was on the rise.
It's interesting how these sector-specific ETFs provide a targeted view of how different parts of the economy are performing. But looking at the flip side, would it be safe to assume that resource-focused ETFs didn't fare as well?
Yeah.
Given the global economic slowdowns we discussed earlier.
You hit the nail on the head.
Okay.
The Satrix Resi ETF, which tracks resource companies, did indeed struggle due to those global economic headwinds.
Yeah.
Commodity prices faced downward pressure, weighing heavily on the ETF's returns.
This really highlights the importance of understanding the broader economic context.
For sure.
When evaluating ETF performance, looking at these numbers, what stands out to you?
Let me see.
Anything that surprised you?
What I find fascinating is the stark difference in returns between ETFs tracking the same group of companies but using different weighting methods.
Okay.
Take the Satrix 40 ETF, which is market cap weighted, and the Satrix equally weighted top 40 index fund as an example.
Okay, so you've got the Satrix 40 and the equally weighted one.
Yeah. The equally weighted fund, as its name suggests, gives equal importance to all 40 companies in the index regardless of their size.
So it's like choosing between a slice of cake determined by popularity versus getting an equal slice regardless of who baked it.
Exactly.
How does this difference in weighting affect performance? Especially for someone considering investing in either of these ETFs.
In a year like 2024, where a few large companies might have driven the bulk of the top 40's gains, the equally weighted ETF might have lagged behind.
I see.
It spreads its bets more evenly, making it less susceptible to the fluctuations of individual giants, but also potentially missing out on concentrated gains.
So the choice between market cap weighted and equally weighted boils down to an investor's philosophy and risk tolerance.
Exactly.
If you believe in the continued dominance of the big players, the market cap approach might be appealing. But for a smoother, potentially less volatile ride, equally weighted could be the way to go.
You've got it. And this leads us to another crucial aspect of ETF investing. Understanding risk profiles and investment horizons. Which are prominently featured throughout these fact sheets.
You're right. The fact sheets use terms like aggressive, conservative, and even moderate aggressive. It's like a spectrum of risk.
It is.
How should investors interpret these risk profiles when making investment decisions?
It's vital to align your investment choices with your personal risk tolerance and investment horizon. The length of time you plan to invest your money. The Satrix Money Market Fund, for example, carries a conservative risk profile, making it suitable for short-term needs or investors seeking capital preservation.
So if you need access to your money quickly or have a low tolerance for risk, the money market fund acts like a safe harbor.
Exactly.
What about those seeking higher growth potential?
On the opposite end of the spectrum, you have most of the equity ETFs, like the Satrix 40 ETF or the Satrix Capped Indie ETF, carrying an aggressive risk profile. These are designed for long-term growth, but they come with the expectation of more volatility in the short to medium term.
So those with a longer investment horizon
Yeah.
and a stomach for potential market swings
Right.
might find these aggressive ETFs more aligned with their goals.
Exactly.
What about the funds labeled moderate aggressive? Where do they fit in this spectrum?
Those are the middle ground.
Okay.
Aiming to balance growth with capital preservation.
Okay.
They might include a mix of equities and bonds,
Right.
providing a blended risk profile.
So kind of best of both worlds.
Yeah. The Satrix Balanced Index Fund,
Right.
where income is a secondary objective, is a good example of this moderate aggressive approach.
So it's all about finding the right fit based on your individual circumstances
Yes.
and investment goals.
Exactly.
There's no one-size-fits-all solution
Nope.
when it comes to investing, is there?
Absolutely not. Each investor's journey is unique, and understanding your risk tolerance, investment horizon, and financial goals is paramount.
Right.
These fact sheets provide a valuable starting point for exploring the diverse world of South African ETFs.
Yeah.
And identifying those that resonate with your individual investment story.
You've given our listeners a lot to consider.
I hope so.
From market trends and sector performance to different investment styles and risk profiles. This deep dive has certainly sparked some insightful questions for me.
Good.
But before we wrap things up,
Okay.
are there any other key takeaways or points you'd like to emphasize?
It's important to remember that past performance, while insightful, is not a guarantee of future returns.
Right.
The investment landscape is constantly evolving.
Yeah.
And factors such as global events, local economic conditions, and even political changes
For sure.
can significantly impact market dynamics. What worked well in 2024 might not necessarily be the winning strategy for 2025 or beyond.
That's a crucial point. So how can investors navigate this ever-changing landscape and make informed decisions about their ETF investments?
Staying informed is key.
Okay.
Keep an eye on global and local economic trends. Pay attention to company-specific news and announcements. And regularly review your portfolio's performance.
Okay.
Don't be afraid to adjust your strategy as needed based on changing market conditions.
That's sound advice. This deep dive has been incredibly informative,
Good, I'm glad.
providing valuable insights into the world of South African ETFs. But I have a feeling this is just the beginning of our exploration.
Indeed. The world of investing is a continuous journey of learning and discovery.
It is.
As we conclude this deep dive,
Yeah.
I encourage our listeners to continue exploring, researching, and asking questions.
Exactly. There's a whole universe of financial knowledge waiting to be uncovered. And who knows, you might just stumble upon your own investment gem along the way.
Absolutely.
So on that note, let's wrap up this deep dive into South African ETFs. We hope you've gained valuable knowledge and feel empowered to take control of your financial future.
Remember, knowledge is power, and the more you learn, the better equipped you'll be to navigate the dynamic world of investing.
Until next time, keep exploring, keep learning, and keep diving deep into the fascinating realm of finance.
Happy investing, everyone.
As we wrap up our deep dive into South African ETFs, I'm struck by how much we've uncovered, but also how much more there is to explore.
It's true. There's always something new to learn in the investment world.
Exactly. We've analyzed market trends, dissected ETF performance, and even ventured into different investment styles.
It's been quite a journey.
It has. But one thing that really stands out to me is the sheer variety of choices available.
Oh, absolutely.
It's almost overwhelming.
It can be, especially for someone new to ETFs.
You're right. The ETF landscape has exploded in recent years,
It has
offering this vast menu of options to investors.
so many choices.
And while this abundance of choice is fantastic, it also underscores the need for careful consideration before diving in.
Absolutely. You don't want to just jump in blindly.
Absolutely.
Yeah.
You wouldn't walk into a restaurant and order the first dish you see on the menu without even glancing at the rest.
Exactly. Investing requires a similar approach.
Right.
It's crucial to understand what you're investing in, the associated risks, and how it aligns with your overall financial goals and strategy.
So it's not just about picking the ETF with the highest past returns or the trendiest sector.
Not at all. Past performance is never a guarantee of future success.
Right.
And chasing trends can be risky.
Yep.
A well-informed investor takes a holistic view,
Okay.
considering their own risk tolerance, investment horizon, and financial objectives.
And of course, diversification is key, as we've discussed.
Right.
Spreading your investments across different asset classes, sectors, and even geographies
Right.
can help mitigate risk and potentially enhance returns.
Diversification is like building a strong foundation for your financial house.
I like that analogy.
It helps to weather market storms and achieve long-term stability.
And ETFs provide a fantastic tool for building that diversified portfolio.
Absolutely.
They offer a convenient and cost-effective way to access a basket of assets with a single investment.
And let's not forget the added benefit of South Africa's Section 12T tax incentives.
Oh, right. Yes.
Which make ETFs even more attractive to local investors.
Speaking of tax benefits, it's worth reminding our listeners that those Section 12T allowances do have limits.
They do.
There's a specific amount you can contribute each year.
Right.
And a lifetime limit as well.
That's an important point. Planning your tax-free investment strategically is crucial to maximize those benefits.
Yeah.
A qualified financial advisor can be a valuable resource in navigating these complexities and ensuring your investment choices are aligned with your overall financial goals.
Solid advice.
Yeah.
So as we bring this deep dive to a close, what's your final piece of wisdom?
Let me think.
For our listeners who might be considering taking the plunge into the world of South African ETFs.
Don't be intimidated by the vastness of the ETF universe.
Okay.
Start by asking yourself some fundamental questions.
Like what?
What are your financial goals? How much risk are you comfortable with? And how long are you planning to invest?
Right.
Once you have a clearer picture of your own investment landscape, you can begin exploring the ETFs that best align with your needs.
Okay.
And remember, it's a journey, not a destination.
Beautifully said. It's about finding those ETFs that resonate with your personal financial story.
Yes.
And who knows? You might just unearth your own hidden investment gem along the way.
Indeed. And that's the exciting part of investing.
What is?
The potential for growth discovery and achieving your financial dreams.
Well, on that inspiring note, we'll conclude our deep dive into South African ETFs.
Sounds good.
We hope you found this exploration insightful and empowering.
I hope so, too.
Remember, knowledge is power. And the more you learn, the better equipped you'll be to navigate the ever-changing world of investing.
Until next time, keep exploring, keep learning, and keep diving deep into the fascinating realm of finance.
Happy investing, everyone.